finance professor who says this deal could have a huge impact on the oil patch. We're joined now by Ari Pandes. He's professor of finance at the Cascade School of Business. Thanks for joining us, Ari.
Thanks for having me, Andrew.
Is this going to be good for oil and gas companies? You reckon it is. They'll find it easier to raise money because they've just got a bigger market now.
Well, they have access to a larger pool of capital if this goes through. So the one thing about the energy sector and the resource sector is they require large capital expenditures, and for the companies here in Canada at least, it's oftentimes a struggle to raise the necessary capital to invest in the projects. So I see it a benefit both to the smaller players and the larger players for the following reasons. For the smaller players, it gives them a lot more exposure to the European markets, but also to the Asian, Middle Eastern markets, as well as the African markets, because we have a lot of mining plays there as well. So it'll give them exposure, possible analyst coverage. So a lot of these companies might go under the radar right now, but if they're joint listed in London and in Toronto, they may get more exposure from the dealers on the other side of the pond. For the larger players, obviously, you've seen they've been having to tap into government-owned entities for financing. So this sort of increases the pie for them, whereby they can tap into institutional investors and retail investors abroad as well. So it gives them another option to raise the necessary capital.
But it looks like the centre of gravity here is going to be London. I mean, Toronto is basically going to become a branch plant for the London Stock Exchange.
I agree with that, and that's why there's the one caveat that in these merger negotiations, they have to make sure that they have, at least Canada has people in decision-making power positions, so in senior management roles. But I think they've sort of been talking about that, at least in the press I've heard about that. I mean, you're right that they're touting it as a merger of equals. And the fact that you're hearing it so much in the press says that wasn't going to sit well with the Canadians. But it does, smell a little bit like a takeover. You're right. But on the other hand, we shouldn't get too much angst about this. I mean, the London market is a well-rooted market that's been around for 300 years or so, and the Canadian market hasn't been around for that long. So the fact that we do have a substantial board representation, at least in the preliminary talks, and people in senior roles, I think is positive and sends a positive signal to the world that the TSX in Canada is an important player in the resource sector.
Now, you reckon that London doesn't have a very good reputation when it comes to regulation?
Well, certainly in the last little while, in terms of banking, they didn't have a very good reputation. But having said that, this merger isn't a merger with an emerging market. It's with a developed economy with a deep history in finance. So just like U.S. and Canada have had harmonization in terms of securities regulation, I think that there will be opportunities here to have better harmonization with the British market as well. So I think both can play off one another there, and we'll see a more efficient marketplace, adding more liquidity as well, which will essentially reduce the cost of capital for a lot of the smaller players.
The Globe yesterday quoted a Calgary guy in finance saying, look, we already feel Toronto's a long way away from here. Now we got to deal with London. I mean, we're just going to be out on the fringes here.
I'd agree with you if we were living 50 years ago. But I mean, everything's electronic these days. Communication is not a problem. So I don't feel that that's really an issue.
I don't know. But, financial types like to flock together. It's all about eyeballs. It's all about having a drink together, lunch.
Yeah, but I mean, if this is going to be a resource powerhouse exchange, certainly Western Canada will benefit from that. So I think what you're seeing now is a little hesitation from the eastern part of the country, and you're seeing a lot more support from Western Canada, because this is really touted as creating a resource powerhouse exchange. And, well, where are all the resources in Canada, or at least most of the resources, and that's out west. So I think you're sort of seeing the political jockeying shifting a little bit here, where you're finding a lot more support out west and a little less support out east for it, particularly in Quebec.
We're almost out of time, Ari. You reckon that this is going to create more momentum for a national securities regulator? The country will just look dumb if it doesn't have one?
I think it will, and already you're seeing it sort of creating problems in the sense that you have different provinces with different views on this. So we're being stuck in sort of a bureaucratic red tape again. You know, one side says no, one side says yes, and I think it's putting that topic in the hot seat again. And if we are going to join, and the British obviously have a national securities regulator, it may draw some attention to the fact that we don't have a national securities regulator, and companies that want to raise capital here have to make filings in various jurisdictions. So that creates definitely some red tape and a headache for some of these issuers. So I think that'll have to be dealt with going forward as well, and it'll bring it to the fore, I think.
Good, because I don't think the Welsh have a Securities Commission, or the Scots, or the Northern Irish. Thanks very much, Ari. Ari Pandes, Professor of Finance, Haskayne School of Business, University of Calgary. Well, coming up, Canada, of course, a world leader in potash production, but it doesn't have the entire market sewn up. We're going to be talking to the boss of Alana Potash.